Hi everyone, we are starting in 4 minutes. Welcome who already joined, we are starting in 2 minutes. Thank you for joining, we are starting in 1 minute. Please stay with us. Hi everyone, we are starting. On behalf of Dorsum's team, I'm welcoming you and very happy to have you on our LinkedIn Live event on Fundamentals of Digital Assets in Traditional Finance Masterclass event. Before jumping into the details, let me pay your attention to some technical details and issues. On one hand, we are moderating, so please, we are kindly ask you to ensure that your language is always respectful and professional. On the other hand, we are proposing you to keep your mobile near you, as there will be some online poll questions during the presentation and during the event. If you have any question, please use the chat on this classroom, or wait until the end of each session to ask. We planned several time for your questions, but if you have or if you don't want to send your question on the chat platform, please contact us after the workshop. We are sharing our details as well. So let's start the fundamentals of digital assets in traditional finance masterclass. Let me introduce Peter Kanti and Botond Báthory to you. Peter is our head of digital assets, and Botond is working with his team as the digital asset expert. So guys, stage is yours.
Okay, so thank you very much, Judith, and I'm welcoming you all. First of all, I would like to show you what can you expect in this brief 40, 60 minutes. What are we going to talk about? So first, we would like you to introduce you to blockchain. It will be a very brief and high-level introduction in order to, get you up to speed. Then we would like to talk a little bit about what's the relevance of this technology in finance. Then we're going to talk about digital assets and crypto assets. And finally, but most importantly, and personally, I think this is the most interesting part of our masterclass, we're going to talk about the opportunity for traditional banks in this space. So let's start. And first, we're going to start a little bit of history, as always. And I just put you a couple of strings here for you. Well, what is blockchain? Where did it start? Basically, we're going to talk a little bit about the last 15 years. But in this topic, the designs for the components of the technology really date back to more than 15 or 20 years. So parts of it was first developed in the 90s. But Bitcoin was created on paper only in 2008 by Satoshi Nakamoto. And his or her identity is still unknown. Even it could be that it's a team who did it. And based on this paper, it was the famous Bitcoin white paper. A group of developers made the software, made the blockchain network, and the first commercial transaction went live on 2010. We call it the famous Pizza Day. Some of you may have heard about it. This was the time when, Bitcoin was not worth that much today. So there was this guy, a developer, who bought 2 pizzas for 10,000 Bitcoin. Yeah, but what happened since then? The technology evolved. It was developed, and I would like to emphasize only one major milestone in this whole time frame. Although there were much more, but I think the most important is when this technology started to be used as a platform, when applications can use it as a transactional layer. And this was with the start of Ethereum around 2015, which is basically the second most famous blockchain and blockchain network. And since then, hundreds of blockchain technologies exist and operate, and many more value-creating use cases are becoming more and more developed. And there are more companies who are looking to pilot or try out the technology. And where we are today, I just brought you two, I think, important data here, which is at one part, it's about what's the market capitalization of these so-called crypto assets now. The total is now above $2 trillion, which is compared to the traditional assets like gold or stocks. You can say it's less. However, it's a sizable amount compared to, for example, the 2017 data, which was around 17 or 18 billion only. And if we want to talk a little bit about hard facts. So what can these technologies do, and what's the usage of these technologies? We can measure the transactions, the average daily transactions, which is, as you can see, still not in the level as with Swift. However, it's significantly developing and higher in each year. So that's what you should know about what's the importance of this technology. It's getting traction. However, it's still a long way to go, but we think it's promising. But before we go to the content, let's talk a little bit about what is blockchain. And some of you may know it. Some of you may be just scratching the surface. I thought today we're going to talk about the most important elements, not everything, but in order to really to make you understand a little bit better. So first, we're going to talk a little bit about what it is on a database level. How can we imagine it? What's in it? And why do we say that it's a blockchain database? Well, the easiest way to imagine it's like you imagine a digital ledger, like a book, where every page records a list of transactions. And when we're talking about blockchain, then each of these pages are blocks, basically. And these blocks contains these transactions. What else do these contains? Data, a timestamp, a unique code, we call it hash. And this is what identifies each of the blocks. Here's an important thing. Each block carries the hash of the previous block, therefore it's connected to the previous one. And that's why we call them a chain of blocks, or hence blockchain. Well, this chaining ensures that the order of these blocks cannot be altered without altering the subsequent block. And this is why we call it, it's a very secure database, because it's very costly to change all the previous blocks, obviously. And if we understood what's in it, then how does it operate? Well, we have nodes, and we have these nodes in networks. So these nodes are individual computers that participate in the blockchain network. And what is very important, that each node maintains a copy of the entire blockchain database and works to validate and relay new transactions. The decentralization, which you can hear a lot about, also means that there's no central authority. So these individual nodes work independently, and it's very important. Because of this decentralization and this distributed working of the system, it ensures that it's resilient and trustworthy. I mean, the whole system and network, and there's no single entity that controls the entire network. So these, what's the takeaway here? Nodes are operating the network, and they are in continuous communication with each other to be in sync. And if we understand what is blockchain, then how it's been operated, then it's also a good way to understand what's happening if we check out the process of a new transaction. And trust me, I'm going to tell you in very simple ways. This rabbit hole is much more deeper, and those who are really into it, I urge you to do that. We just cover it in a high level. It's just basically 6 steps. So when someone wants to make a transaction, they create a transaction that obviously includes the amount and includes the recipient's address. This is broadcasted to the network, checked if the recipient has the initiator has the necessary amount, and then a block is created to represent this transaction. Then it's sent to all nodes in the network, which we talked about before. And then these nodes validating the transaction or the next block in the blockchain system. And when the next block gets validated, then it's added to the existing blockchain. Obviously, there are certain complex mathematical solutions to do this validation. We call it a consensus. If you are really interested in it, you can check it out. What are these? But just to mention some, Bitcoin works with a so-called proof of work consensus, when the nodes have to solve a complex mathematical calculation in order to validate the next block, while, for example, Ethereum works with a different solution, which is called proof of stake, which is a much different and less energy consumable exercise. All have pros and cons. It's just good you to know. So that's the basic of the blockchain. What you should know about it, and what we talked about, that these databases are distributable. They can be used by many parties, and these are secure, tamper-proof, and obviously easy to audit, since all the transactions are in timely order. And these are the main characteristics what we use when we want to decide if this technology can be used for certain use cases. And what I just brought you here is a couple of examples that how can the technology itself create value for the financial sector. And really, there are a lot, and these are just a couple. But we made it easier for you, just put it into groups. So we can call about credit-related use cases. We can call about investment-related use cases. We can call about workflow-related use cases. We can have trade finance-related use cases. And you can see the main idea here is to share a common database between parties. For example, when we try to model a trade route for a trade finance, we have many parties who need to see the documents. So if it's distributed, if it's done by many parties, and it's recorded by many parts of the networks, maybe it's a value add. So that's what's been tried out here. Obviously, we have the digital assets, which we're going to talk a little bit about later, when we are using the kind of the settlement layer or the tamper-proofness of the blockchain technology. We can talk about insurance-related use cases, which you may have heard about. There are so many automation-related interesting stories when in an insurance process there are so many actors, and if a claim is proven, then maybe the payments and the transactions can be automated. So blockchain can be used for that as well. We can talk about leasing type of examples, and we can talk about payment type of examples. Maybe that's the most obvious to use blockchain for payments. So there are so many, and really what I was thinking that it's good if we're not just talking, but asking you if you have any favorite use cases which you think has potential. So we prepared the short poll for you, which is basically about our most, what we think are the most important 6 use cases, just to give you a cue. And we're really curious about what do you think, which one are the most promising for you. You can scan the QR code, go to this slide, and here some polls are coming in. So I can see payments are very exciting for somebody. And yeah, and here are the crypto people as well. but here are tokenization. That's also very interesting one. So we have, okay, it's getting more, yeah. we're gonna wait a little bit, but these are still interesting. Credit automation, yeah. Actually, that is one of my favorite, automating credit via blockchain, but just a personal favorite. Yeah. Okay, I think it's not gonna move anyway. So thank you for the for your pause. Okay, another one. So trade finance and payments are the winners here amongst you. Okay. Yeah. So thank you for your poll. It's really interesting. So trade finance and payments were the one which you choose the most, and tokenization, crypto trading, that's also got some. And in the next chapter, we're gonna talk a little bit about crypto assets, and what you can see here. We just put here a screenshot. I'm sure many of you may be familiar with. It's a couple of days old. It shows the top 10 crypto according to a site that really aggregates all the data around them. And what can you see here? It's the Bitcoin is obviously the biggest one according to market capitalization. Ethereum is the next one, but you can see others in the list as well. And obviously you can check it out yourself, which are the biggest one. But the takeaway here is that currently we have roughly more than 10,000, maybe more than 50,000 cryptos in existence. It doesn't mean that every one of them are equal. Let's put it in this way. But what we can see that these assets represent a 2 trillion market capitalization today, which is, as I mentioned, it's a sizable amount. And I guess it's good that we have some regulation coming in. And when we are talking about crypto assets and what are these crypto assets, I really like to use the term and the definition that was introduced by MiCA, the EU regulation, because I think it catches very good what's behind it. And here's the definition. The crypto asset is a digital representation of a value or a right that can be transferred and stored electronically using a distributed ledger technology or similar technology. And I would like to talk a little bit about the last part of this definition, because that is the one which connects blockchain technology, which we talked about, to crypto assets itself. So what can we see here? Crypto assets itself are living on blockchain technology. And what does it mean that they are living on? That they are practically using blockchain technology as a settlement layer. So it means that its transactions and accounts are recorded in the blockchain's transactional database. And that's why is the connection. If it's a decentralized one and it's using a decentralized settlement system, obviously without no central authority, and maybe it's a decentralized part of it is decentralized. And some of or many of the value aspects are coming from this kind of topic. And here's a couple of things that we think are important in terms of crypto assets. So what we see in the world that these crypto assets are already creating some value in different areas. The first one is coming from the basics of the blockchain technology and all this settlement layer, which is basically eliminating intermediaries. So the most interesting example, I think, for this, if you think about cross-country settlements, cross-country payments, which has a good example in the Ripple, which uses Ripple network to transact between banks. Or the other one, which we see very important aspect, is that due to the fact that these blockchains are transparent and auditable, we can check their fundamentals, the technical fundamentals at least. What are they supply? What are they the minting frequency and the amount? And they can provide some portfolio diversification benefits, and this makes them popular for investment purposes. It's a different question that which investor invests in what type of crypto assets, but that's the truth, and it's a fact that people are investing into these assets. The third one is a very interesting one, and maybe it's hard to imagine from Central Europe or from the Western Hemisphere, is that there are certain parts of the world where the population is, due to certain factors, underbanked, and in many times they use blockchain and they use crypto assets to transact and to connect to and pay for their stuff. And the fourth one is much more like a vision, but some part it's reality now. That due to the fact that it's most of these assets are decentralized, they can be used and they can play a major role in the realization of Web3, which is kind of the aspect and the vision for the next internet, the internet of ownership. The internet of ownership is basically means that some parts of the internet can be owned via tokens, and it means that some parts of the internet is tokenized and can be transferred into certain wallets, certain people, between certain people. And obviously, as we are talking about, that these tokens are building on top of blockchains like crypto assets, then it's an obvious thing to have a digital payment layer, or could this represent a digital payment layer for crypto assets? So these are the four main topics, and just to give you a word, I just also put a question here. It's another poll with a different QR code, so be aware to scan it. And the question is the following: what do you think crypto asset services would fit into the offering of your institution, and how do you see it? So I hope you can reach this poll. I see now one, yeah, two, yeah, just waiting for your answers. Yeah, my colleagues told me there's a little bit of delay when I can see the numbers, so I'm that's why I'm a little bit waiting. Okay, so we have an absolutely. It's interesting. We should definitely talk then. Yeah, so they are unlikely. It's reasonable, and possibly. I can't see any. Definitely not. That's a good idea. Okay, I'm waiting a little bit for the rest. And most of you says it's possible. It's possible. Okay, I think we can go for the next slide, and with this, I'm going to pass the word to Boton, my colleague, and he's gonna talk about a little bit about regulation.
Thank you very much, Peter, and I'm also thrilled to welcome you all in today's Masterclass session. After all the interesting stuff that Peter talked about, as he already mentioned, we're going to transfer to the topic of regulation. And on this point, I would actually like to invite you to ask any questions in the chat once again, because this can be a tricky topic sometimes. So with that, let's get into it. MiCA, the regulation we're going to talk about, is the EU's own regulatory response to the crypto market. And it has probably become the most comprehensive crypto regulation globally at the moment. But before we get into the details, I would actually like to talk a little bit about what were the causes of its birth. And the number one was consumer protection. As we all know, the reputation of the industry has for a long time before been tarnished by a few really bad actors who caused harm to consumers. And this regulation aims to address that by creating strict or at least complete guidelines for companies in this space. And it's also meant to increase innovation by attracting big companies, innovative companies into the EU market, and hoping to gain the lead in this race for innovation in digital assets. And one reason for that is because the EU has fallen behind in a number of other competitions for innovation, such as in the case of the AI or semiconductors or electric vehicles. So they see this as a good opportunity to win in one strong segment. And I would also mention regulatory harmonization, which isn't the most exciting word, but the reason why it's important is because prior to the introduction of MiCA, if a company wanted to offer its services, crypto services in the whole EU, it had to be compliant with lots of different regulations. And with MiCA, if you have a license, you are allowed to offer those services in all member states, all 27 countries. So that will also feed back into the second point I mentioned about innovation by bringing those big companies in, because they no longer see it as too much of a complex environment. But let's get into MiCA itself and what kind of players it regulates. We can divide those players into two main categories: crypto asset issuers and service providers. And in terms of issuers, there are three subcategories based on the kind of tokens they issue. I'm not going to go too deep into about this. Of course, there are different requirements for all tokens. Some of the biggest ones with huge market capitalizations have some additional kind of stricter requirements. But the three main kind of tokens, I think it's good to get a grasp of. So other tokens are mainly just utility tokens. And those are ones that offer some kind of good or product or service to the people who hold the tokens, and those are under the scope of MiCA. There are some kind of tokens that are not, such as NFTs, which have been hugely popular a few years ago, or DeFi tokens. Most of them are not in the scope of MiCA. Utility tokens are mainly the ones that are involved in this third category. The reason why I started with that is because the other two are highly similar: asset reference tokens and electronic money tokens. The shared common characteristic between them is that both kind of tokens aim to achieve a peg, a stable value relative to another asset. And the easiest way to distinguish between them is basically just to ask two questions. Is the token trying to achieve a peg to one single asset? If no, then it's definitely going to be an asset reference token, regardless of what asset it aims to peg itself to. It could be a commodity like gold, different fiat currencies, or even other crypto assets such as Bitcoin and Ethereum. But if we're talking about some tokens that only aim to peg to one single asset, and that asset is a fiat currency, such as the British pound or the US dollar, then that's going to be electronic money token. I think you may not be familiar with this phrase, electronic money token, but you definitely heard of stablecoins, and some of the biggest stablecoins, such as Circle's USDC or Tether's USDT, are going to be electronic money tokens. Moving on to the services, MiCA defines 10 crypto asset services, and if any provider in the EU wants to offer any of these, it will need to get a license for that. Some of the services that are defined in the regulation include crypto trading, crypto custody, portfolio management relating to digital assets, advisory services, and basically you name it, most of the significant ones are in there. So if you want to offer any of these, you first have to be compliant with some basic regulations that apply to everyone, no matter the service they offer. These include some expectations such as always acting fairly, decently, and transparently, having a plan in the case of bankruptcy so that your customers' funds are protected. This applies to everyone. And then, of course, there are specific requirements for all 10 services. So if I want to offer crypto trading and custody, I have to be compliant first with the basic requirements, then the specific ones for crypto trading, and third of all, the ones for crypto custody. That's basically it. And moving on to the regulatory bodies, it's pretty simple because ESMA has nominated a local body that regulates in each country and issues the licenses and then make sure that everyone stays compliant. For instance, in Hungary, it's been given to the national bank. In many other markets, I imagine the same has happened, but it could be different, and that's basically their role is very important because they are the ones who directly regulate the players. Only exceptions are very major companies with huge tokens, such as Tether with the biggest stablecoin USDT. That will be regulated at the EU level by the European Banking Authority, but almost everyone else will be regulated by their own local body. But let's talk about something that's a little bit more exciting, and that is the market opportunity and the market landscape today. The reason why you are justified in asking the question, why would banks want to enter this area, is because for years it was not an option. We didn't even consider it as a realistic prospect. The three reasons why today that has changed are the following. The number one is regulation. We already talked about that. There are strict but approachable, doable requirements for every player, and it's created a safe framework for banks to enter. It's no longer an unregulated area. The number two is the size of the asset class, because crypto has reached, as Peter has already mentioned, a market cap of over 2 trillion. It's currently, I think, around 2.34, something like that. And that is a significant asset class by itself in a size that can no longer be ignored by the traditional players. And they're no longer ignoring it, because there is increasing openness from regulators. If you think of the Bitcoin and Ethereum ETFs that have been approved this year by the SEC, it's increasing openness from wealth managers, 3/4 of whom are aiming to increase their exposure to Bitcoin. And the market shows, the numbers show by players such as the CFA Institute, that many professional investors are already allocating a 2.5 to 5% portfolio weight to this asset class, which is a great news because ideally it's not going to take up 10% or more. It's a volatile asset class still, even if not as much as before. But we see this openness from many, many players, and of course from retail investors, which would be the third reason that many, many people are investing, hopefully safely and responsibly. And of course, the industry has a responsibility to educate them. But what we see is that many players are actually taking that challenge right now, If you look at the bottom right corner on this slide, several of the biggest banks in Europe have already announced that they have either acquired a license to offer crypto services, are in the process of applying, or have even introduced a service, which is also a strong sign and something that would have been unimaginable a few years ago. And if we move on to the next slide, we're going to be talking a little bit more about this opportunity, because you could still say, okay, but why should banks do this? Why is it a good opportunity for them? Aren't people kind of afraid or against the banks, the crypto investors? And the reason why I would argue that that's not the case is because we have the data to back it up. So in most of the countries in this region, what we see is that the majority of people who are considering starting crypto investments are actually saying that they would prefer to do so with their traditional banks. Something that once again would have been surprising maybe a few years ago, but the safety and the long history of these established institutions is something that most people feel much more comfortable with than maybe fintechs or crypto exchanges. But what we see today is, of course, they trade with these players because no traditional banks offer this solution. So I'm sure in most of the countries, you guys are all familiar with Revolut, that has a very popular crypto trading service. Many neobanks do as well, such as N26. And of course, we have the centralized crypto exchanges such as Binance or Kraken and Coinbase. They're also quite popular, but the reason for that is because there are no alternatives. We have actually conducted our own survey in Hungary, and about half of the respondents said that they would actually prefer to trade with traditional banks. And this is, you could still say, okay, half of those people said it, but how many of them could there be? But if you look at the ownership in terms of the population, we observe an average of 8 to 10% of crypto ownership in European countries among retail investors. And some are really upfront, such as Slovenia with 18% or Croatia with slightly less. So this is a major opportunity. Just to wrap up once again, the developing regulation, the strong demand for retail investors, and the trust advantage for banks are the three core reasons why we think it's the right opportunity for them. And they also seem to think that because Raiffeisen Bank has already introduced crypto trading in Austria to its retail clients and has partnered with a neo broker, Bitpanda, to integrate its services into its own mobile banking application. It's important to highlight that Raiffeisen has not gained a license because it's mostly acting as an agent for this kind of player, but it's still a major step that would have been hugely surprising a few years ago, that a significant bank, traditional bank in Europe, allowed crypto assets to appear in its mobile application. So that's a huge development, and we expect to see a few more like these in the next couple of years. But enough of me, it's now time for you guys to share your opinions. And our question to you is, the final question today is, how would you describe your institution's current attitudes towards offering crypto asset services? So head over to the website, feel free to scan the QR code or just hit the URL that you see there on the left side. And I will be very curious to hear your opinion, because while I imagine a lot has changed, of course, there are a lot of questions to be answered. So I will be excited to see where you stand. We are going to take a minute to allow you to answer. And I'm not sure you guys see the current standings, but what I see is that right now it's 50-50 between cautiously optimistic and neutral or undecided. So basically that's a more measured approach. No one's really in the tails, being extremely supportive or very opposed to this idea. But the majority is open, at least, which I think is, in terms of the timing, makes a lot of sense, because there is a clear opportunity. MiCA, some parts of MiCA are already in application, but all of it will enter into application next year, 1st of January. So I'm not sure if the results are final, but right now it's 60% for cautiously optimistic and 40 for neutral. Those are some interesting numbers. And with that, I think I'm going to give the floor back to Peter.
Yeah, it's good to see these numbers, and good to see that most of you are cautiously optimistic, but optimistic. So,
Peter Botond, you have a question.
Oh, sorry. Yes.
So what do you think? When can banks offer crypto? At what time frame? This is the question.
I think the opportunity is there in the present because, as I mentioned, MiCA has a few titles, few parts, and some of them already apply for the kind of tokens that we talked about. All of the regulation and the regulations relating to the service providers will apply from the 1st of January next year. So I would say it's possible to do it today. But in terms of the likely time frame, I expect the kind of boom or huge activity to hit the market in about a year or two, maybe 2 years is actually more than the ideal time frame. By then, there will be first movers in most markets, in my opinion. So I would say any time from today to within the next 2 years, but the boom I would forecast from 6 months from now to like a year and a half is what I expect.
Okay, thank you, Botond. And everyone, if you have any question, please use the chat wall.
Yeah. Okay. Just wrapping up today's masterclass. Here are three things to consider, and why do we think that cryptocurrencies, crypto assets are here to stay. So one part is that it could represent a revenue lever to these institutions, because obviously it could be a new product. It could be a new product for them, which can generate new revenues. And during this initial period, it could be priced with a premium. On the other side, if there's a segment in a market, and we think that there is a segment, as Botond has mentioned, that obviously this needs to be serviced with certain products. So this could also increase this revenue lever, as I mentioned before. And the third one is that it could change or fine-tune the positioning or the differentiation of an institute towards a more digitally oriented, maybe younger clientele. It differs from market to market, but definitely a more digitalized and more innovative image. So these are the three main topics that could help institutions. And as much as after this wrap up, it's time to close soon the masterclass. But before we do it, if you have any question, now's the time to ask them in the comments. And as we did it before, Judith can help us, and we can answer it. So I'm going to. There's a little bit of delay, so I'm going to give you a little bit of time to ask anything if you have any more questions, and then we can answer it.
Also, I encourage you to ask your question, or I shared the link, the LinkedIn link to Peter and Botond, so you can contact them directly as well if you have question. But please use this time for asking.
Yeah, I'm just checking the comments. Until then, there's another thing which we've mentioned. So in the right corner of the slide, you can see a QR code. You can scan it in, and you can unlock a masterclass badge. There's a really interesting assessment I urge you to try it out. And after that, you can download the badge that you were here and you were with us. It's a little bit of a present from us to you.
Okay, thank you, Peter and Botton. I've learned a lot and so excited to hear more about this topic, really. And thank you, everyone, for being with us. I hope you enjoyed this masterclass session and you have more questions, thoughts on these fundamentals or beyond. So if you intend to hear more and step up, please register to our upcoming event. You can find a QR code here. And again, do not forget to unlock your badge, what Peter mentioned earlier. So thank you for being with us and have a great day.
Thank you very much.
Thank you very much. Goodbye.